What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 17th of 2020. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, we've got a lot of things to discuss, but we'll mainly be talking about the recent pullback we've had over the last 48 hours in cryptocurrency markets and talk about whether or not this is something to be concerned about, or is it simply a bump in the road in the longer-term trend. You can probably guess where I stand on it, and I'll be backing it up with a lot of data and price action analysis. Outside of that as well, we're also going to be talking through a sponsored interview with Jackson from Caleb and Brown to get an idea about what's going on in OTC markets. And I can tell you guys, it's quite optimistic. All right, so let's go ahead and dive right into the video. So taking a look over the last 24 hours, we can see not only in the top leaders of the market like Bitcoin, we're seeing a severe correction, but along with that as well, across the board here, most cryptocurrencies are in red territory. I would say the broader altcoin space is down about 8 to 10% here in the last 24 hours, and over the last 2 days, somewhere around 15 to 20%. So again, we are seeing a pretty decent pullback here from what we were used to over the last few weeks, where it was just constant days of green price action. And I have to say, guys, I kind of highlighted this, I think, about 2 weeks ago when we were looking at market dominance, and we had hit our 7th week of decline in Bitcoin dominance. We had not seen this kind of consistency on a multi-week basis where altcoins were getting this much market dominance. It had been a very long period of time. I think as far back as 2015, 2016, since we'd seen that many consistent weeks. So it was very interesting to see that. But it seems we finally are getting a little bit of a cool down here. So if we take a look at the 7-day chart here for total market capitalization, we're actually down on market valuation over the last week. And if we take a look here as well, excluding Bitcoin and just looking at altcoins here, we're pretty much back down to where we started at the beginning of the week. So now that we're taking this into mind here, this looks pretty disastrous, going down from altcoin valuations being at 120 billion down to 100 billion even. That's pretty concerning, I think, to a lot of people. And seeing total market capitalization go from 308 downward to 276, that's a 10% drop right there, right? So is this something to be concerned about? Well, it really depends on your time frames. And quite frankly, guys, this is not concerning to me because over the last 3 months, we can take a look here at how markets have performed. And we were down at a valuation range of around 180, 190 billion. And now we're up to $277 billion. We're way beyond where we were just a couple of months ago. And again, this has really only happened, this rally has really sparked since the beginning of the new year. So we're only about, a month and a half in here, and we've already been able to produce really solid double-digit returns here in the sense of percentage gains. And that's not just in Bitcoin, it's in altcoins as well. If we take a look across the 3-month chart here, altcoins have crushed it, going from 60 billion all the way up here to 100 billion, nearly doubling. If we take a look at the absolute top here, it was pretty much a good sign here because we did a 100% gain across the board on altcoins here from the base of the cycle, right? So it makes sense that we would kind of get a pullback around this range. And not to mention as well, this is really, I think, the biggest thing here, because I know most of you are probably, sure, maybe some of you own altcoins or are watching altcoin prices, but I think a lot of you at the end of the day really care about Bitcoin, right? That's what I care about as too. I do watch Bitcoin. It's probably my most leading indicator for determining risk on or risk off narratives for cryptocurrency markets. Well, let me ask you a question here. Can you spot the dip? I'll go ahead. I'll give you some time, guys. Can you spot anywhere on this chart any significant dip? This all being terrible dip below 10K. It's right there. This chart is today's date right here. It's most updated. And I don't see much of a dip at all. And this is why I always stress to look at longer term time frames, guys. I know most of you are doing it, or at least I know at least some of you consider looking at the long-term time frames and stuff, most definitely. And I'm just giving you a hard time, and I know I'm repeating a lot of key points here. But if you're looking at the short-term time frames, if you're looking at the 5-minute or the hourly, no wonder some of you might feel like panic selling. No wonder some of you are trying to overtrade these markets. But if you look at this chart, things seem pretty good. In fact, if I'm looking at this chart personally, you might not see this. I'm not saying there's any guarantee of it. But if I'm looking at this rainbow logarithmic chart here, right, that shows us these general bands over Bitcoin's logarithmic chart and the cycles that we can clearly see, being in the lower blue bands, I'm probably still more eager right now to add to my positions personally. Now, I've already stacked a ton of positions for this year, and I've been allocating, to be completely transparent with you guys, my available cash that I have from the YouTube channel and my other ventures and stuff into my small business and stuff that I've been building, my crypto startup. And if you guys are interested in that, there's a link to keep up to date with that, banking for the 21st century. But the key point here is that this is a range here where I'm completely comfortable with adding, because anywhere in these lower bands here, I know I'm in the beginning stages of the next cycle, right? Anytime we've been down in this range here, right, we don't stay down here for too long without seeing returns inevitably in the future, right? And again, it's not indicative in this case. The future is not indicative of the past in this case. Things can be different, right? We might not have the same parabolic rises we had in the past, but we can see here historically that the odds are in our favor in this case, right? According to history. So that's the key point that I want to drive home, guys. And along with that as well, another thing to take into mind is volatility, right? Bitcoin and cryptocurrencies can seem so volatile sometimes. They can seem like they're just getting crazier and crazier, when in reality, and sorry, I just realized my window's a little bit. I'll push it off the side here, guys. When in reality, volatility has actually been historically decreasing. The peaks in Bitcoin volatility have gotten lower and lower and lower and lower and lower and lower, right? So we're seeing a general decline here in overall volatility. And you can see that laid out over price here. Now, why is that? Well, it's because Bitcoin, its price is not seeing as exorbitant of gains, and it's also not seeing as sharp of corrections. We've had in the past over 90% corrections in Bitcoin, but the last bear market, for example, was an 80% correction. And along with that, in the rallies as well, we're not getting as significant as run-ups as we used to, right? So if you're expecting to 10x your money overnight, that's probably not going to happen in cryptocurrency markets like it possibly could have back in the past. You're dealing with much larger market sizes, you're dealing with much more active traders and liquidity, and you're dealing with a much larger market in general. It's much more difficult for a market that's valued at $100 million to do a doubling in valuation to $200 billion than it is for a market that's valued at $1 million going to $2 million. Hopefully you see my point there, guys. It's much easier in that case for a market to go from that small a scale to doubling, whereas when you're looking at a much larger market, in this case, looking at for it to double, it's going to take a lot more liquidity, a lot more buyers, a lot more adoption in the cryptocurrency space. Now, if you went through all that, guys, now you can stay here for the TA, all right? I know many of you are probably doing analysis on the charts and stuff. I'm a naked trader, guys. I look for support and resistance. I observe that we had a 63% rally here, 63.5% rally, and we've had a near 10% correction here, all right? Some people are focused on the big evens because we broke 10,000. It's the end of the world. Some people are using crazy amounts of indicators. I don't even want to use my SMS indicator here. I'm looking at simple price levels. We took resistance here because 10,500 is a relatively big even level, right? Big $500 interval, probably second most important outside of the $10,000 intervals. But along with that, we also have here, right, general resistance from the past. And then also we've pulled back here on this 10% pullback right on top of previous resistance, previous support, previous support, previous support, previous support, and previous resistance. This was a very significant level here. 9,500 played a big role back here as a key level of support, and then also resistance 2 times, right? So this is not something I'm deeply concerned about. If we keep pulling back, yeah, it might be a little bit worrisome, but I think I'm only going to take upon that opportunity to average into my position, because my time horizon is not what happens over the next few days or next few weeks. I'm not trying to trade these markets, guys. The longer term payout in this case, for focusing on the longer term trend, right? It's so much more simple, right? Sorry, I've got some of my short term drawings here. I'll pull up the BLX chart here just to make it a little more simple to understand, right? I know we've taken a look at this a lot, but it's very similar to the rainbow chart. This is a logarithmic chart for Bitcoin. Puts it in very simple context. Now, I do want to talk a little bit on a deeper note, because you guys probably know I've been preaching the concept that we've been in the altcoin cycle, and we have, right? We have more than a 10% decline here. But I want to go ahead and talk a little bit about Bitcoin dominance. So if we take a look here, I'm going to go ahead and turn off my drawings. Come here to the daily real quick. Right. We've had a pretty significant rebound here, closing up about a week's worth of gains here, as we took a look at just a moment ago, in altcoins in a matter of really 3 days here. And this is, again, not Bitcoin just soaring to the sky here. This is Bitcoin correcting, and therefore altcoins, much like how, for example, when Bitcoin goes up and altcoins continue to outpace it, when Bitcoin corrects, altcoins correct even harsher because they have larger amounts of gains in the sense of the price action that they've seen over the last week. It's not rocket science, right? Makes pretty decent sense here. But the major thing to watch for here is actually what is going on the short-term time frame, right? We know in the longer-term trend here, guys, even though we've had a pretty big rebound here, that the trend is still pretty clear, right? Our SMS indicator has not flipped, so we're not getting bullish on Bitcoin over altcoins yet. And along with that as well, another thing to note is taking a look here on the shorter-term time frame, right? So we can see here right now that we've had higher lows here for Bitcoin dominance at a consistent range of resistance here ever since back here on the 16th, okay? So the thing that I'd be watching for here, as we are building an ascending triangle, right? This is, to me, something that I would be concerned about because if it keeps holding this low range and gets up here above 65.3 or 65.4, then in this case, it's going to signal to me that Bitcoin is gaining dominance. Whether it be in a corrective way or in a way where Bitcoin's price is going up, it doesn't matter. It means that altcoins are probably going to have a pullback. Now, from what I'm seeing right now, there's a good chance here the price could break down here, right? We could set a lower low here for Bitcoin dominance, signaling that altcoins are coming back up. People are buying the dip and continuing the cycle for altcoins, right? But we have to see. Time will tell. I'm not going to try to make any calls here because, quite frankly, this has been a pretty strong rebound here for Bitcoin dominance. I cannot lie. And along with that as well, you know, we've had a pretty good run so far, right? So we'll have to see here. Again, watch that short-term time frame. Watch that ascending triangle. Again, it's in favor of the opposite side of where I'm betting on the market, but at the same time, guys, I'm going to keep open to the reality that it could go through and that we could see Bitcoin gaining more and more and starting to take back some of the losses from last week. But again, take a look at the weekly time frame. That's all you got to do, guys. Look at these longer-term time frames. Makes it so much easier. You don't have to fret about the short-term moves, right? If you're in this for the next couple of months, if you think that's all the market's going to give for altcoins, I mean, again, everyone can have different opinions, guys, but that's not where I stand. So just want to make my point clear, guys. That being said, though, I'd like to know what you all think about these topics in the comments down below. You know, what are you guys thinking about the market right now? And where are you putting your bets right now? Anyways, that being said, if you guys could drop a like, I appreciate it. But let's go ahead and dive into this interview with Caleb and Brown. What's going on, everyone? And in today's video, we're sitting down with Jackson, who is the Chief Operating Officer at Caleb and Brown. They're one of our sponsored partners here on the channel. And not only that, but along with that, Jackson's been a good friend of mine in the space for some time. We met as far back as 2018 and have had some good conversations since. But Jackson, I think it's a really interesting time to be talking to you, man, because you're working in the OTC space, or the over-the-counter market, where a lot of large volume trades are coming in. And I think as we've seen this resurgence in the market, we've got a lot to talk about.
Yeah, thanks for having me on the show, Nicholas. It's always good to chat with you. Yeah, we are seeing an increase in volume in the OTC markets. It's in line with the global markets, with the spot markets. But more importantly, because OTC traders are they're not so much day traders that have high frequency of transactions. They're kind of your real investors, actual people behind the wallet, rather than just kind of frequent trading under the single account. And with the pickup in the market recently, we're seeing a big increase of new users. And perhaps more interestingly, we're seeing like roughly a 50% increase in the number of specifically wealth manager clients. So these are clients that are actually wealth managers themselves who are now interested in the cryptocurrency space. So I think there's definitely been a kind of level up in terms of reputation for our industry.
That's awesome, and it's glad to hear that you're not only seeing, again, continued excitement with the kind of rise in market price action, but I think along with that as well, seeing new players come into the space on the institutional side kind of speaks, in a sense, with no pun intended, volume to the space, and how we're starting to see a lot more interest and I think legitimacy come to cryptocurrency. So my first question here, which is always of interest, as I always try to ask my OTC contacts to kind of get a better idea. As you mentioned, these traders are trading for the longer term trends. They have a much longer term time frame usually. So what is it looking like? Are we seeing more demand on the buy side or on the sell side? Just kind of simply put from what you guys can see.
Yeah, so we're definitely buy side skewed. So there's a lot more interest with new clients and even with existing clients. I think the FOMO is starting to kick in a little bit again. And one of the one of the really important things to note is that um, while the market's getting hot, people need to start planning out that exit strategy. While the time is right, probably not right now. They need to have the plan in mind so that it's not something they start think about when things are going nuts.
Absolutely, man. I think that's the biggest thing is that even if you're a small trader, or especially I think in the case of a larger trader, it's even more imperative because you're dealing with large sums of liquidity to have that game plan, not only to enter into a market at a sound price, but also to get out and make sure that you can take profits when required. So to kind of build on that, Jackson, I'm curious to dive a little bit deeper into kind of the mindset of what's going on inside the head of an institutional trader in this case. What are some of the things that, in the sense of like indicators, I always wonder this as well. So kind of indicators or signs that these kind of investors are looking for who are doing these usually larger sum volume trades?
Yeah. So with trades of larger sums, we're not looking at we're not looking at technical patterns where you're trying to clip a couple extra percentage points at every candle. What we're doing is we're kind of taking a macro look at the market, and we're answering two main questions. The first is the price currently expensive or cheap? Seems like a very obvious question, but there's two ways to look at that. And one is a time-based indication of the price. This is something like the Mayer multiple, which is nice and simple and popular one, which is simply the price divided by the moving average of the last 200 days. That is time-based because it basically takes the market's interpretation of the last 200 days worth of price action and figures whether it's high or low based on that. Now, a volume-based interpretation of the price would be something like the volume-weighted average price. That still takes time into consideration, but it also actually takes into consideration what the actual transactions involved are priced at. So if we have an extreme amount of trading volume at a low price, and the next day there's very little trading volume, maybe perhaps for an illiquid asset at like double the price, it skews that time-based moving average up, but a volume-based moving average will tell you that it's kind of the real price, which is the amount of capital that actual clients transacted with is much lower. And this is a really important point because right now we're looking at the $12,000 mark for Bitcoin, because if you look at the volume profile and you set it to kind of a 70 or 80% band, once we clear $12,000, 15% of transactions will be in loss. So only 15% since the peak in 2017. What this means is the sell side pressure will be dramatically decreased because sells, what we see is that it comes from a lot of panic, like market sell action, which provides most of the sell side pressure, comes from panic selling. It comes when you're seeing your position decrease to a point where like you're no longer comfortable with that amount of loss. And after the $12,400 mark, only 10% of transactions will be in loss, which means we have just almost completely eradicated that kind of panic sell pressure from the market.
Absolutely, Jackson. I think that's a very important point to bring up. So, I mean, you dove through a lot of important things. The Trace Mayer multiple is a really good indicator for kind of the longer term timeframes and picking up when we're in a cycle or when Bitcoin's cheap. And along with that as well, is you're talking about this kind of price target around 12,000. The indicator that I always point people to really simplify this and kind of point to what you're talking about, where you're talking about like a percentage of time periods or overall total trade volume where it's been profitable. There's a really nice indicator we use on a website called Look into Bitcoin, and it basically shows us the days of profitability. And we're nearing around 96 to 97% of Bitcoin's entire history where it's been profitable or neutral to buy into Bitcoin. So you just don't find that in a lot of markets like this. If you take a look at a lot of store value markets like gold, I mean, you have these 8 to 9 year periods where it can take time to recoup back to the original price you got, and that's considered a store of value. So I think it's fascinating, man. This is the important stuff. When institutions see time and time again, you're setting these higher lows and higher highs that break out to new parabolic rises. I think it's a really interesting asset, at least for some of exposure for a lot of these portfolios.
Yeah, absolutely. So that would be a time-based interpretation of the price because it's kind of profitable for 96% of the existence of Bitcoin. Um, yeah, so I think we're just seeing like almost like the vast majority of indicators right now pointing upwards. So I think we're in for a good time with Bitcoin.
Absolutely, man. I think it's just that a lot of people aren't really paying attention right now. But to kind of build on that, Jackson, to talk a little bit about kind of like for the client basis that you guys are dealing with in this case, is it tend to be more people who are taking on heavier positions? From what you can tell, is it either heavier positions where a large sum of their portfolio is diversified in crypto, where they're maybe more of a high risk investor, or is it more about 1 to 2% allocations for their portfolios, where they're kind of getting their feet wet into the space as they would maybe with maybe something like gold or silver?
Yeah, so our client base, they we're a personal brokerage, so I think our client base might be slightly more on the higher volume side. However, I don't think they're high risk clients. The majority of them have wealth in other assets, and the I guess the percentage would not be it would not be 1 to 2%. I think that's what kind of fund managers, or that's what our industry is suggesting to fund managers to kind of remove some of the traditional market risk. But I think we're probably closer around 10-20% because
Okay,
I think
yeah.
1 to 2% is kind of not interesting enough for the average investor.
Right, exactly. I think for the clients you're talking about, I mean, if they really understand the space this early on, I think that they want to get a sizable position. And you brought up a key term there about being a broker in this case versus an exchange. So if you want to take a little time to explain, I think that's very important for people to understand in the sense of OTC markets versus going to something like maybe like Coinbase or Binance.
Yeah, so Caleb and Brown is a personal brokerage. And the biggest difference is that every single client of ours has a personal broker who they can call. They can pick up the phone and speak to a human on the other line and assist them with their cryptocurrency investment at any stage of that process. So we're perfect for, we have clients from first time investors all the way to family offices. So this is because we can make the investment work for you, whether you're investing as in any structure, as a company, as a trust, as a superannuation account, as the personal investor. And we have key insights that we can update you on specifically to your account. So it's a lot different with kind of trying to manage your own investment on these digital platforms because you have someone who you can speak to who's overseeing everything, a second voice that you can get an opinion on. And from another perspective, we give our clients access to almost every liquid asset on the market. So rather than having to KYC at every single exchange and risk losing your personal information, you kind of do it once with us, and then we have access to the entire market for you.
Yeah, it's awesome. And I think you guys offer kind of an all-in-one solution for those who might be taking a little bit more of an active position or may want a little bit more of a personal touch comparative to exchanges where sometimes you can't seem to, it's on the opposite end. You can't seem to get them on the line at all. And the customer support sometimes is non-existent in a lot of players. But I think as you mentioned as well, Jackson, like in the difference between a brokerage versus an exchange, you not only get much more of a personalized approach, but the trading is trading or investing, depending on what your time frame is inevitably different. Right. So in the case of an exchange, for example, when you place a market order or a limit or stop order in this case, you're usually going through and trading on an order book in this case, where in this case, you can actually settle on OTC transactions for a direct swap in this case to avoid slippage. So again, maybe you want to talk a little bit about that kind of benefit for OTC trades.
Yeah, absolutely. So with our trades, you get one spot price and we very clearly state the fee for it on the invoice. So you don't kind of, you don't having to kind of execute your order through the order book depth and kind of get, a low price and then a little bit higher as you go down that order book. We execute the transaction for you at the best rate possible. and then we give you one single spot price, and our fee is very clearly stated on the invoice. Another benefit to an OTC transaction with us is on the buy side, you're actually able to send the funds, wire the funds to us at the bank, take a photo of the receipt, and send that to us as evidence that you've deposited those funds. Even if those funds don't arrive in the one to 3 business banking days that it takes, we'll be able to execute that transaction for you immediately. So if you see the market rallying and you're having trouble depositing funds onto an exchange account, we can execute a transaction for you immediately so that you can take advantage of the price volatility and not be a victim of it.
Yeah, I got to tell you, Jackson, that's something that I've heard from a few companies that operate in a similar fashion to either OTC desks or performing LLC structures here in the US, where you have much more freedom to kind of trade on your own. You almost kind of act like your own hedge fund manager in a sense. But I agree with you in that case. To be able to have a way where you can get around the wait time of registering accounts on cryptocurrency platforms that can take a very long time. It's a huge selling point for OTC markets or these kind of alternative routes to getting your capital exposed to crypto markets. And as you said, between the fee being transparent, not having to deal with slippage, and being able to have a human on the line when you're dealing with those large sum orders, I think it goes a magnitude further than what you can expect from exchanges. So I'm happy to hear that you guys are doing well. I'm happy to hear the volume is ticking up, and not just that, but also that there's new people coming into the scene as well who are managing wealth sums that are much larger than what we've seen before in the crypto space. So I'm curious to ask you, Jackson, how can people actually get involved with Caleb and Brown and check into more information about what you guys do?
Yeah, so we're at calebandbrown.com. From there, you'll be able to sign up, or you'll be able to leave an inquiry, and one of our brokers will get in contact with you in the same business day. And our KYC turnaround will, in the vast majority of cases, be within the same day. So we're a fast service, and very importantly, a service.
Awesome, man. That sounds good. I like it. Keeping it simple and stuff, helping people get through their first step on making those large orders in crypto. I'm really awesome. It's really awesome to see what you guys are doing, Jackson. I'm glad to hear you guys are continuing to grow, and congrats as well on the expansion to the Singapore office as well. I'm excited to see you guys keep growing, and we'll have to have you back on the channel here soon, man. Thanks for coming on.
Thanks for having me, Nick.